Moving forward with our analysis here, and this is the second part of the project, of the educational series, how to use the Ichimoku Kinko Hyo indicator when trading binary options. Under the second part here, we are looking at the trading strategies. Selling the Kumo top is being called a chapter, and I will have only one example here because we had two examples on the previous chapter with buying the Kumo bottom. Now this is being called selling the Kumo top. The Kumo is the cloud, so just saying that the Kumo is the cloud. Kumo means the cloud, so that there is no something that is not understandable there. So selling the Kumo or selling the cloud stop, it means it's the opposite of the previous strategy, and everything what was valid on the previous on buying the Kumo bottom, so everything that was valid on the previous subchapter is valid here still, with the amendment that the rules are applying for a bearish environment. Now, what does it mean, a bearish environment? A bearish environment appears when the cloud, the Kumo, is red, like it is here. See, this is the cloud, there is red, meaning a price is moving to the downside. So meaning price is trending to the downside, and the Kinko is below both price and the cloud. So here, Kinko is below both price and the cloud. There you go, bearish environment. So here, you might say that we have a bearish environment. Market is trending to the downside. Because of that, you are looking for avoiding fake moves. Markets have the tendency to make fake moves all the times, and in order to avoid being trapped in such a move, a trader should be patient and wait for the perfect place when should enter the market. In our case here, the perfect place is not the one when price reaching the cloud stop, but the one when the Kinko or the lagging span is reaching that top. Now the Kinko is the actual price projected backwards back in history for 26 periods. In our case here, this is a 4-hour chart, and the Kinko, it is being projected 26 periods. So whenever you are looking here at whatever candle, so if price is here, for example, okay, at 131.83, so normally 26 periods back, this is 26 periods back, and that would be the corresponding level. So that would be the corresponding level for the Kinko. Take a look here, like this, 26 periods back. That is the corresponding level for the Kinko here at this candle. Now, exactly like that, you have to imagine that if price coming from the downside from this bearish environment, so here is still a bearish environment, so price coming from the downside here and trying to break to the upside, normally people will look at this break here as a bullish break. While this is true, it is not being confirmed by Kinko. Kinko shows the price 26 periods prior. See here the spike in the Kinko. See here the spike in actual price. Well, we have to look at 26 periods before, and this is the actual level where the Kinko was meeting the resistance in front of it. Now, do you ever wondered what it makes price to turn just like that out of nowhere from after a strong move? So just like that, out of nowhere, as you can see, price is going to the upside, and it is turning for more than 32.09 to the downside 130. So more than 200 pips without any explanation, price is returning. Well, we do have an explanation, because at that level here, if you take a horizontal line, see, at that level here was exactly our Kinko resistance. Was exactly our Kinko resistance here. Now the Kinko, like mentioned on the previous recording, does not show the shadow of the candle. See, this is the actual level of the Kinko, but price normally went to the upside with a spike and tested the Kumo top, and this is where we are coming with our strategy, selling the Kumo top, selling the Kumo top strategy. And normally what we should do exactly at this candle, this is a 4-hour chart candle, and normally what we should do, we should buy at this moment, we should buy puts. We should engage in buying puts for end of day expiration. Why end of day? Because this is a 4-hour chart, and it depends very much on the moment of time this is happening. If this is happening, I don't know, with only one candle before end of day, then you might decide not to be end of day, but to be, I don't know, 1 hour expiration or 2 hour expiration, depending if the fixing is done on the market. It depends on the session that you are looking for, but usually such spike moves are happening on during London time or New York time. If it is on Asia time, then they should be treated with respect as well. So buying puts for end of day expiration, or for 2 days expiration, or for short-term expiration date, and you head from this level. Basically, if you take a look at the time taken from here until we actually had one close above here, 54 candles. Now 54 candles times 4 hours, it is more than 200 hours, so more than 10 trading days. 10 trading days meaning 2 weeks. So either you have end of day expiration or end of week expiration. You are engaging in buying puts. In buying puts, the striking price normally should be around these levels here. If you miss that level, then just go for another setup. Remember, these examples are being made on the euro-dollar chart, but you have to know how many charts are there and how many currencies are there. The same strategy can be applied to all the assets you are trading, even equities. And this is the beauty of trading binary option, because with the Ichimoku Kinko Hyo, because it allows you to take into consideration a lot of pairs. The indicator basically stays the same, the setup stays the same, and what you are applying at one pair or and on one time frame can be applied on any other pair. So this would be the striking price, and when buying puts, one is looking for the price at the expiration time to be below the striking price. Now that was with our second strategy here, trading strategy under the second part of our using the Ichimoku Kinko Hyo strategy. So we had so far the selling, the buying Kumo bottom, the selling Kumo top or the clouds top, and now we are going to take a look at we had the bullish and bearish cross between the Kinjun and Tenkan, and still under this part we're going to take a look at the importance of looking at different time frames, short-term time frames to medium to long-term time frames. So stay tuned please for the next recording.